thank you, Dale, for being such a great host. You've been the marathon man the last 2 days. You've been doing a great job. And before we bring on Lydia, I wanted to make sure that everybody knew what a rock star you've been.
Thank you, Blake.
And so much so, you're still wearing a collared shirt. I actually had to put on the ForexAnalytix clothing. I couldn't deal with the collar any longer.
I haven't done laundry. So anyway, thank you, Blake. Appreciate it.
Hey, have a great interview with Lydia, and she's awesome, and
she is
excited to have her part of this venue. So,
I mean, after these 2 days, Blake, everyone should know what to do the rest of the decade.
Yeah, no kidding. With every asset class too. That's awesome.
Yeah. All right. So Lydia, at Faith Might on deck. Great to have Lydia here. Lydia is one of my favorites. Hi. Lydia, how are you? Thank you so much for your patience.
Of course. No problem.
Great to have you here at the 2-day summit. And I know that you put your heart into everything you do, and you're one of the better currency cable people that I go to. The only thing I'm better at is Europound. But everything else when it comes to, and even look, I think it's bottoming here, Lydia, so I can't wait to get your take on what's happening here in cable. And your company is FM Investments, is that it? Group?
FM Capital Group.
Okay, and you're also an RIA, and you're also a mentor and a teacher that most likely has more patience than I do. So welcome to the summit, Lydia. Looking forward to your presentation.
Thank you so much for having me.
You know the drill for sharing the screen here, right? The green button.
And Lydia, if you can get a little bit louder on the microphone.
There we go.
A little bit.
Okay. All right. Perfect. Thank you guys for having me. So I know we're a little behind. So
also, Lydia, I have to tell you that the moment we announced that you're on, we had the person sending a question for you. So at the end, I have at least one question.
Okay. All right.
No okay. Enjoy the presentation, guys.
Thank you. So I am going to get through this part so we can get to the charts. But I am talking about market implications, but from the pound perspective. So I wanted to kind of lay out why I look at markets this way. I get a lot of questions as to why I only trade the pound. So I want to just kind of give everybody, if you don't know me, I have been trading Forex for about 14 years now. And I started off like everyone does, and I've traded everything. I traded all the pairs, all the crosses. I traded everything. And what I found, and I traded all time frames too. So not only choosing what resonates in terms of currency pair, but also with your time frames. I traded 1-minute charts. I traded weekly charts. I traded the gamut. And what I have landed on is the pound quite specifically, and I'll tell you why. It resonated with me because while I was trading, when I started out 14 years ago, I also traded all kind of indicators, trying to get a handle, just, like all of us, we are learning what system will work for us and with our trading style. And I really love Fibonacci. So if you follow me for any amount of time, you know that I trade Fibonacci, trade using Fibonacci levels. And I loved how pound reacted to Fibonacci levels. And so I decided to pare down from everything that I was trading. And I looked at the pound dollar is what I love. So, that's my bread and butter. I also really like the euro pound, and I like the way they move. And if you trade those two currency pairs, they move very differently. And I still really enjoyed both, how they both reacted to Fibonacci and technical levels, but Fibonacci's in particular. So I chose that. Then I realized that I was not being successful on 1-minute charts. And so if you know me, I am a swing trader. That means I look at weekly charts, and I'll look at anything as from a weekly, and I drill down daily and a 4-hour. I will look at a 1 hour or 15-minute, but not to trade. It's usually just to watch price actions around news events that are volatile. So month of March, I was looking at, equities on a 1 hour, 15-minute chart, just watching this thing crash, right? But When it comes to Forex, I typically start at a weekly chart. And I'll dial down to a daily and a 4-hour. Today, in the interest of time, I'm going to take you through charts from a weekly then to a 4-hour, just so I'll give you, the big picture view that I'm seeing in terms of swings, and then a 4-hour chart in terms of setups. But so that's how I chose what resonates, and that's what I stick to. I do not, I don't day trade. I don't trade the euro dollar, and I just stick to what works for me and what really resonates with my trading style. So
Have
I
you
would say
ever been to the UK, Lydia?
I have not been to the UK.
I bet
But
you're really going to resonate in London.
I don't know if I have enough sunshine for this California girl. So I would say just always choose what resonates, and basically just trying to give you a lay of how I chose my trading style and getting an understanding of how best it works and how I make adjustments when we're in trending markets versus ranging markets. And then to show up every day. A lot of traders, those of us who've been trading for a while, we do this every single day, and we have a set time of day that we're doing this work. So a lot of newer traders are not, they'll come in every other day, or they'll come in at random times of the day. With Forex, it's really important that you just show up every day at the same time of day. So just kind of wanted to give you a lay of how I got into this trading style. And now I'll give you just a quick overview of what I'm seeing fundamentally. So the pound, ever since Brexit, through 4 years ago, Brexit has been the prevailing fundamental headwind or tailwind, depending on what's happening in the political atmosphere. And basically it's become the ultimate risk currency. When we're seeing times of risk off, when the market crashed, you'll see most cases we saw the pound crash. And really the impetus for that was earlier in the month. Trade talks between the EU and the UK had broken down, and we saw the pound rolling over. And when the equities crashed with coronavirus hitting U.S. shores and hitting Europe, and then hitting the UK, and then hitting the U.S., we saw the pound really crash, particularly against the pound and against the euro. So that's now that we're starting to see talks. We had some news of a possible treatment. If we look a couple months, several months out, maybe a year or so out, we'll get news of a vaccine. As we start to get the economic, we're going to get back on view in Forex around economics. I think we're going to see Brexit talks. Brexit is going to continue to dominate the pound flows for the rest of this year. Coming up is the June 30th deadline, and then we have the 31st deadline, December 31st deadline, where some kind of trade agreement either will or will not be hammered out. So just keep an eye on that when you're trading the pound. The dollar is people are talking about it. We've called it a safe haven for several years now, since the last financial crisis. What we're seeing now with coronavirus is that it's actually beyond a safe haven. It's actually a liquidity haven. People are wanting cash. People are wanting dollars. So despite the extreme monetary easing that we've seen with the Fed, I think the Fed has gone the furthest just in terms of slashing rates and pumping trillions of dollars into markets. But we're also seeing this demand for dollars. And so while we feel like fundamentally the dollar should weaken in the long term, just because of all the easing that has happened, there's also just a demand in the market for dollars from emerging markets, from other markets, just people wanting cash, at least here in the US. So we're seeing this tug of war, which is why we haven't seen the dollar sell off in the face of all this liquidity. The yen still remains a safe haven, but what I've noticed, and I think several of you have noticed, is that there's this divergence right now between the yen and the S&P. And the S&P is what I watch in terms of equity markets and when I'm looking at safe haven flows. And what we're seeing right now is that there is a divergence right now. When the yen diverges, we're seeing yen strength. We're seeing yen weaken. And we're seeing equities kind of based here and kind of rally. We're going to see the yen follow. And so we'll see, and I'll show you what I'm seeing there when we look at the pound yen. The euro, with the lack of the fiscal stimulus package, I think we're going to see euro continue to weaken here. We saw a nice rally, particularly against the pound. Remember, my view is against the pound. We saw a rally against the pound, and that did not last. It did not stick. So I think as long as the EU is unable to figure out what kind of stimulus, and they're going to be really leaning heavy on the ECB to come up with a lot of support for their economies, the euro probably is likely to weaken from here. And then the CAD. The CAD, all the commodity dollars, the CAD, the Australian dollar, the New Zealand dollar, have all joined the QE club, enacting QE in the last month in response to the coronavirus. The Canadian dollar, the Canadian economy has seen a double whammy with the fall in oil prices as well. The Australian dollar has saw extreme weakness because of its proximity to China, and considered as out of the major currencies, as basically a China proxy. And then the Kiwi is our soft commodity dollar. And it's actually weakened tremendously as well, as they were one of the first countries outside of outside of China to get hit with the coronavirus, and now they're one of the first to reopen. So we're seeing that the New Zealand dollar is finding a little bit of strength here, and unlike other central banks, which might be a tailwind for the Kiwi, the Reserve Bank of New Zealand has mentioned that, you know, negative interest rates are not out of the question for the Kiwi. And that's likely in response to the fact that the Kiwi remains kind of strong relative to some other currencies. So that is just my quick rundown of what I'm seeing fundamentally. Let's go now into the charts. Okay. All right. So my look here, this is the Kiwi. I'm sorry, this is not the Kiwi. This is the cable.
Yeah, cable.
So cable going into 2020, we saw a run up right into $1.35 with a lot of euphoria around the Tories gaining majority in Parliament. Which looked like good news for Brexit, and we wouldn't get political gridlock, and we saw the pound rally. And that soon came off because of tensions between the EU and the UK around trade agreements and actually working out the terms of the Brexit deal. So we're seeing that come off here, and this crash here is the coronavirus crash. So we're going to see this pretty much across the board. These large moves down in a couple of weeks. This is the weekly chart here. And what we're seeing now is this bounce here and this recovery right into support. So what I look at is, you know, we'll draw a Fibonacci here because this is great continuation, really. This rally into $1.35, coming right into the 61.8 level and falling to new lows. That's what we like to see as fib traders. That's what I like to see. And so when I take a look at this new bounce, clearly it's a correction, and it's a correction into or just past the 50% level into this support at $1.2634, and then we saw it turn over and kind of head down into about $1.22. But if we take a look at the 4-hour chart and kind of zoom into what's going on here, you can see like this rally never really corrected into the fibs. And when that happens, and really even starting from here, we had this nice rally. We had a bit of a correction into support, and then it took off into $1.2634 resistance. And we fell over last week, and we're right back at resistance again today, and not ever reaching these fibs. When we see moves like this, when we see trend moves that are having very shallow corrections, this is very good for the direction of the trend right now. So on the 4-hour chart, the trend is to the upside, and what we're seeing in the short term is actually still quite bullish behavior. So So the fact that we've come into support here, come into resistance again here is very bullish. I actually think that cable has a chance to return to $1.30 as the markets start to sell off the dollar just based on monetary policy, and in contrast to other central banks, which haven't pumped trillions of dollars. Most of them are looking at more like 300 billion. So there's billion-dollar packages. So they're significantly smaller relative to what the Fed has done and has kept the door open to even doing more. So right now the market is just responding as fundamentally as it would, which is just negative when there's a lot of monetary policy easing. So I see this going into $1.30, and if we pull back out, $1.30 is up here. That's a return back to these highs. That's a return back to the start of this downtrend. So, oh, this is $1.30 here. I'm sorry. So if we $1.30 will probably be our line in the sand to see if we return back to highs, and the dollar actually has a sustained sell-off, or if this is just in response, and we have some other fundamentals that kick in with like with the news, with the economy, and things like that. So that's my view on cable. Taking a look at the euro pound. So euro pound, I will say this is where Dale says that this is where Dale had this call. He did call this out to $0.90 to 90 pence. And I thought he was just like getting way ahead of himself. So we spoke, and when he and I spoke, we're actually looking at this double bottom in here, this double bottom potential.
I'm always over my skis, Lydia.
I thought it would go to 88.50, which was a long call from 82, but Dale called it to 90, and I just thought that was too soon to make that call. But here we are. This is part of the coronavirus crashing here. We saw a crash in the pound, and it took us all the way to 95 pence. And here we are now back below. And I have to say I'm surprised by the pullback. I thought we would see continued weakness in the pound, and we haven't. So we've broken that 61.8, which to me signals a reversal back to lows. So we'll see what happens with the euro. I think the euro fundamentals actually support a move lower from where we currently are. We have a nice level of support here between 86, 86.50. A break below that will see us return to lows. If we hold above here, we can see a return to 88.50. We can see that this has become a point where we see a lot of bids enter the market because really until the EU can come up with a fiscal package, the market's going to be concerned that their recovery in the EU may not look like a recovery in the rest of the world, where countries are able to have fiscal and monetary packages that kind of support the economy while businesses and consumers.
Would closes back over 61.8 kind of change the tone if we recaptured 87.47 and closed above it a few times?
So good question, because now you set me up for, this is the view I wanted to show. So drill into the, I'm going to draw it here because it's easier, but then we drill into the 4-hour chart. And is that fib? What is this? Oops, sorry. This is the fib I want to put on here. Down to current lows here. So I think recovery of that 87.50, basically 87.47 that you're talking about, Dale, I think could be a catalyst, yes, to move higher still. And really, but really we need a close above this 88.50. So anytime we come into 88.50 from the downside, so far we've been met with sellers. So 88.50 would be more important than the 87, 87.50 level.
Thank you.
To the upside.
I have a question for you, Lydia.
Yep.
From one of our attendees, how would you suggest beginning traders would try and trade FX markets given the current conditions? Is this a market for amateurs to stay out of, or just reduce leverage significantly? What would you advise, Olivia?
Well, I think for all newer traders in Forex, I think smaller size and a smaller account while you're learning is definitely how you want to approach the Forex markets, period. I mean, I started trading in 2006, 2007, 8. So, I mean, the volatility that you're seeing now is nothing like what we were seeing at that time. So I think it's actually a great time for you to get into a market that's, that's kind of more volatile than we've seen in the past couple of years. But I would go at it with a smaller account and smaller position sizing for sure. But it's not a time, I don't think it's a particularly special time that as a new trader you should be out of the markets. It's just the perfect time. Really.
Yeah, because if they can handle this, they can handle anything.
Yeah.
And I don't think things are going to quiet down like they did pre-coronavirus.
For like last 2-3 years, really, as the last 2 or 3 years, I think we all agree that it was uncharacteristically quiet in Forex. Okay. So this is just a more volatile market.
This is what we be careful what you hope for, right? Here we got it now.
This is actually what we love. This is why we this is why we trade Forex. This is
what we live for.
This is it. So you should definitely get in. Be smart with your account sizing and your position sizing just as a new trader. That's
good advice.
Yeah, not a particular special time in the markets at all. Guppy, I know you all love the yen. So this is what I found particularly interesting about the yen. First, during this Corona crash, we did not breach the lows back in 2016 when the yen strengthened considerably down to $1.23. We only made it to $123. We only made it to 124 yen during all of this volatility, all of this crash and sell-off in equities. Another thing is that the RSI was even higher during this coronavirus crash than it had been in the sell-off last year in 2019. So all of that to say that the yen could be done strengthening here. And you might, if you're looking at equities as well, maybe equities has a chance to stabilize as well. I'm actually not surprised at markets or equity markets being so well supported right now. I actually did an overlay looking at let's take it down to the 4-hour chart. If you take a look at just the equity markets right now, this is today. So this is today. But when I was just looking at it, just studying all week, we've had quite a divergence as equities have moved higher. The yen has just basically just kind of stayed put. It hasn't moved. It hasn't really moved any high. It hasn't moved higher. Hasn't weakened until today. So today we're getting some yen weakness. And what I wanted to point out is when we see this divergence between the yen and equities, typically equities is leading, and what we'll see is the yen catch up and start to weaken as well. You'll see that a little bit in the past here, and so not too surprised that the yen weakened here. It happened on today, which is nice coincidence, but I think that we can see the yen actually start to move a bit higher from here, particularly with the divergence at the lows and the RSI. And I like the pound yen to kind of recover and get back towards $140.
Okay.
And then I'm happy to just finish it off with the Canadian dollar and take questions from here. Right. Just because the Canadian dollar, the pound CAD is probably the only market that I was looking at amongst the major pound pairs that is actually in a range-bound market. So there's not much trend here on the weekly chart. We get moving in one direction and we completely retrace. So this has been the case, it seems like, for the past 2 years in the pound Canadian dollar. and then drilling down into a 4-hour chart, you can really see that, at the extreme high, the top of the range is $1.77, and at the lows we have $1.73, and you're basically just taking a ride down from resistance to support and back up again. So back here, now we're up here. I have this about $1.75.50 kind of as an intermediary level. Sometimes where we seem to turn over if we don't get to 177, but right now we're pretty much range bound when it comes to the pound Canadian dollar. So just wanted to show an example of a non-trendy market, even during these volatile times in the market. Not everything obviously is going to be moving in the same direction.
Okay,
So
I'm
happy to take questions from there.
Okay. How did you get into FX? What was your background and how did you get into FX from Randall?
So that's a great question. So my path into Forex is not a typical one. My mother actually introduced me to Forex. So I came back.
Wow.
I came back home from business school. I just graduated from business school at Georgia Tech. And I'm looking for a job. I was between jobs at the time. And she said, you should come with me to this seminar. And I said, okay, well, what is it about? And she said, oh, it's about buying and selling currencies. And I said, well, you can't do that. And as soon as I said that, I said, okay, I'll go, because I just realized that anytime you think there's something that can't be done, it probably can be done. So let me go and see how it can be done. And this is, I don't know if Blake knows this, but this is actually how I got introduced to Blake. So I went to the seminar for the company he was working at that time.
Wise Trade.
Yes. And was super compelled by how easy you could buy and sell currencies relative to stocks. I mean, at the time I was only buying mutual funds and stocks at the time, and you really couldn't sell stocks then. I mean, short selling wasn't really a thing like it is now. So I was just so taken with Forex, because you can buy and sell, and
it's where it's at.
It is, clearly. And so, I mean, that was 14 years ago. And I have been trading, and so just started trading my own account. And from there, I got a mentor. Ilion Yotov was my earliest mentor. I followed Blake as well for a long time, but really Ilion's approach to the markets is how I learned fibs, really got into support and resistance. And from there, just learn the indicators enough to be able to trade the charts on my own with my own analysis. And then from there, just got into Twitter, and really it all snowballed from there. When I got onto Twitter in 2009, I made it a point to talk about Forex. And at the time, I had already decided I was talking about the pound, and that was very unique. People were like, why are you trading just the pound? And pretty much how I ended up here today with you all.
Because
So
it resonated. Does your mother still trade, and what trading platform do you use?
Oh my goodness, my mom does not trade. My mom is just an investor. She just likes investing, period. She'd rather I trade it for her, and she gives me the money to trade on her behalf. She prefers it that way. She's just interested in just
why have
markets.
kids? Why have kids if they're not going to trade for you, right? Okay. What a great presentation, Lydia. Thank you so much for all your hard work to make
Lydia,
yes.
as I said earlier, we had a question that came in the moment we announced that you're going to be on. Actually, it's a triple question. How do you define success as a trader? What's the hardest mistake to avoid while trading? How do you feel your biases affect your trading? What are 3 things I can do to take my trading to the next level? All those came very, very early before the event.
It's a 12-part question, Lydia.
Yeah, but if you want to briefly, address those bullet points, I think we can close with that.
Sure. I mean, I think like any trader, I'm defining success by my P&L, but also if I'm following but above that is if I'm following my trading plan. So if I'm coming at markets with a plan, that's great. If I'm sticking to my plan and trading the plan, that is the mark of success. And then the outcome is what the outcome is. So I think it's super important to go into markets every week as a swing trader every week, and have a trading plan in which you're going to look at markets. How to take your trading to the next level? I think you should definitely pair up with a mentor. So any of the traders here, ForexAnalytix runs a great service. And if you're newer to Forex, I have a course actually that you can take. And if you're here now, I actually have a special for, I'm running this special right now for all of the Trader Summit participants and attendees right now. You can check out this course. It really is designed to teach you how to look at charts for yourself and learn just the 5 basic indicators that most of us have actually gone over in these last 2 days and used. And just to give you a basic foundational course so that when you're now then approaching a mentor, you have a background of knowledge to which you can build on and just accelerate your learning curve. So that that's one thing I think it's really important. I think a lot of us were self-taught and we've gone through the gamut of learning, blowing up accounts, all of that. I will also say be comfortable with losing money. I actually spoke with somebody on Sunday who was interested in trading Forex and was just very concerned with not losing any money. And I just told her, like, you have to get rid of that ideal. You're going to lose money. And so the quicker that you can just embrace the fact that you will lose money, the better you'll do. And the key is to just, how are you approaching the markets? Which is why I wanted to kind of start off with how I come into the markets. That's the biggest thing. Do you have an approach to Forex that works for you, that resonates for you, and the current prevailing market environment works with that approach? I mean, those are the things that will give you a higher probability of success. Like Forex is not stocks. You know, this is a leveraged market for us retail traders. So it's really important that we are much more systematic than just buying and holding something, and have a real approach to the markets. What were did I answer? I only answered 2 of the questions. Were there more, Steve, that I didn't really touch on, or another part of the question that I could touch on?
Yeah, let me tell you, how do you define success? You answered that. What is the hardest mistake to avoid while trading? How do you feel your biases affect your trading? And what are 3 things I can do, the person that's asking is saying, to take my trading to the next level? These were the questions.
Okay, yeah. So definitely my biases, my biases are probably recency bias. So if, you know, when you're getting a win or a loss and you immediately jump into the market, either to revenge trade or either to, you know, feel like you can recapture more money in the market. Also, there's a feeling of like not gathering enough pips out of the market and being remorseful with your wins. Please don't feel that way, but recognize feeling that way. I think a lot of us will feel that when we take profits and we see the breakout just continue to run, you know, for another 100 pips, and you're mad at the 50 pips that you booked. So those are the different biases. There's a lot of psychology, I think, in Forex, even more so than in other, in stocks. I'm really comparing to stocks. I can't say to futures or options, but I think with Forex, there's a lot of psychology that you want to really be aware of within your own trading. I know I had to work through a lot of revenge trading. Like revenge trading was a big thing for me when I first started trading, and being remorseful for the winners that I was taking. I could capture 100, 200 pips and be upset because I didn't get the last 50. I mean, come on.
That's me, Lydia.
So, yeah.
You know, Blake Morrow says, don't live in woulda, coulda, shoulda land.
Yes, Blake is great for that. Blake is actually one of his early, kind of mantras.
I've been living there for 60 years. I finally came out of it because of Blake.
Yeah, it's tough to watch the market go when you're not involved, you know, especially when you've been on the right side of the market. But Blake said a long time ago that, you know, if you're up more than 20 pips, there is no reason to take a loss after that. And so I've had to refine my approach to just kind of, you know, incorporate that, you know, that thought process is that, you know, especially in this market, just, you know, being careful, you know, where your psyche is at any moment in the market, being able to walk away from the charts.
And, you know, Lydia, I mean, that was obviously a long time ago. The market's changed. There's just a point in your trade, because it really depends on your time frame. It's like there's a point in your trade that you like, hey, I shouldn't take a loss from here on out. I just shouldn't.
Right.
You know,
Right. Absolutely. Yeah. And I'll say back then, Blake was looking at a 5-minute chart. So like you said, it absolutely has to do with the time frame.
yes, it does.
Okay.
It
But
totally has to
so-
do with the time frame, because when you said, Lydia, you shouldn't be losing money once you're 20 pips in the money, you know, I immediately thought, with my trading style, which is more, you know, longer term, I would get stopped out probably in every single trade.
Many ways to
Exactly,
skin a cat.
right?
Steve, right?
You have to know your time frame. And
Absolutely.
the last the last question, I think, was not for biases, but I just think that now is as good a time as any to get into the markets. And I will say, lastly, don't spend too much time on a demo account. So I think that's another really big mistake that that new traders take. Use a demo account to learn the platform that your broker has set up for you. And as soon as you're comfortable with the buy button and the sell button, setting your limit and setting your stop loss, you should jump into a real account. Because the psychology around that is completely different. I mean, you're going to feel a lot different about losing $100 than you were about losing the $10,000 in the demo account. You're going to feel way different about that. And so you really need to get into, like I said, a small account with small position size as soon as you can, to start to trade your approach to the markets and start to understand your psychology around trading, so that you can get a handle on that as well. And so that's really what I would say for newer traders who are looking to get in one and then take your trading to the next level.
Thank you, Lydia.
Yep,
You were
absolutely.
the icing on the cake.
Well, thank you. I'm sorry for the technical difficulties there.
It's okay. That's television. That's live
It
TV.
happens to the best of us. And Lydia, I want to say thank you for being part of our event. This is it was really
Thank
nice
for
having you.
me. Thank you
Thank
so
you,
much.
Lydia.
Thank you very much, Lydia. It was a pleasure.
Thank you. Happy to be here. Thanks again for including me today. Thanks, everybody.
Okay, Lydia. You can follow Lydia at Faith Might on Twitter and then get all the information. Also at her website. You want to give
Here's
your
my
website? There you go.
here.
All right.
And again,
FaithMightFX.com.
go fairly quickly. I know people are asking for the slide. So this is the offer. You can jot it down real quick, everybody. And those are my handles, Twitter. That's the firm. That's my blog. And so you'll find those things there.
Thank you, Lydia.
Thanks, guys. Thanks,
All
everyone.
righty, everyone.
Have a wonderful day.
Thank you, Lydia.
Is it dinner time? Yeah.
It's
Feels
about
like
it.
dinner time to me, man.
You know, Dale, I want to say what a great job you've been doing. And Steve, wonderful. The whole team really came together to put together this event. Lydia's the last speaker, right?
Absolutely, Blake. That was it. I think we wrapped up a quite long event, today event, right?
You guys have done an amazing job. Really quick, I'm going to show this just so you guys have it. Remember, if you're, oh, sorry, I've got my dogs. Excuse me.
No worries, Blake.
Of course that would happen.
I had my cats
Hold on
earlier on.
second.
Yeah.
They know exactly what I'm speaking. Okay. So what I wanted to say, guys, sorry about that. If I should have shut my door to my office. The Trader Summit, ForexAnalytix, you know, I know we've talked a little bit about ForexAnalytix, not a lot, but if you want to be involved and you want to take advantage of the Trader Summit offer, 75% discount on the first month, and then 25% discount thereafter, which is great because we don't do that normally on monthly subscriptions. So Steve or Stelios or one of you guys can
Already done, mate. Already done.
Put it in the chat. And then I want to once again thank our sponsors, Forest Park FX. If you guys aren't happy with your broker, I mean, I know in the United States we only have a few, but if you're somewhere else, you might actually be able to get ForexAnalytix for free if you join the reimbursement program, and you could even be with a broker that's part of that program, and all you have to do is go through Forest Park and you can possibly be using ForexAnalytix through your trading. So make sure you talk to them. They've helped hundreds and hundreds of our clients over the last several years. IG Markets, really wonderful brokerage firm. I haven't used them personally just because they're so new in the US, but if I traded retail and I didn't use JP Morgan for my executions, I'd be looking at them because I know what's out there. CMT, Tyler did such a great job today outlining the CMT organization. And Steve, you need another 12 hours a day so you can finish up your designation. That's what I said.
Yeah, I'm eventually going to do it. Let's hope things calm down a little bit to give me the time.
All right, and then obviously FX Street, they've been wonderful to us over the years. We've mutually put a lot of stuff on each other's sites. They're a great media partner. So thanks to all of our sponsors, and thank you guys for your patience. I know we had a couple of technology glitches, but nothing we couldn't overcome. And Steve, you want to tell everybody about the recordings and how that's all working?
Yes, we're going to edit all the recordings. They're going to be uploaded, worst case scenario, within the weekend, by the end of the weekend. And then we're going to email everyone, letting you know how you can watch them. So that's how it's going to go.
Great. And then I want to do something that I hadn't done. I meant to do it a couple of weeks ago. Then we got caught up putting together this event. If you like this shirt, it says ForexAnalytix. Mine says Chief Risk Manager on the back. We've got a few different ones.
Like that one.
We do need to do a product giveaway where we have mouse pads. These are nice ones too, real thick, super thick mouse pads and coffee mugs and t-shirts. And we got to do a couple giveaways. So you guys tune into the Face webinar next week. We're going to figure out a way to get a couple of winners for some ForexAnalytix stuff that we have. So so this way you can have some. These are definitely the most comfortable shirts I've ever owned. Dale wears his like 8 times a week.
I have a couple.
Just kidding.
Like it's called swag.
Swag. That's it. Swag.
Yeah.
Anyway, if there's anything that you'd like to wrap up with, Dale, I want to thank you guys for all being part of this last 2-day event. You guys have all made it a success. Our team, all the listeners, all the viewers, thank you all so much. So Dale, I'm going to pass it over to you. And Steve,
Okay,
thank you so
buddy.
much.
Thank you,
All
Blake.
right. I have one thing to say. No matter what, all these narratives and everything we've heard the last couple of days, I think Kenny Rogers was a traitor. What do you think, Lydia? You got to know when to hold 'em, know when to fold 'em,
Yes,
know when to walk away, know when to run. You never count your pips. When you're sitting at your platform, there'll be time enough for counting when the dealing's done. Don't just count your pips, count your blessings. Thank you, Lydia, Steve, partner.
Thank you, Dale. You were, as always, a wonderful host. So, I'm thankful we were here. Everybody have a wonderful day, and we'll see many of you tomorrow on Face.
Yeah. Okay, everyone. Remember, money comes and goes. Time is gone forever. Make it count. Find people that resonate with you, as Lydia said, that have your same ethics, your same morals, and invest in yourself. When you sign up for education, you're not paying somebody. You're investing in yourself. And everyone we brought to the table is one of the best in the industry. So thank you very much. You have plenty of choices to make now. Steve, I guess you could end the meeting. Adios, everyone.
Adios. Bye-bye.
Bye.
Bye-bye.